With recession fears creating steep declines in the stock market, you're probably wondering if there are still some opportunities in this market. Our next guest, Ben Phillips, joins us now with some ideas. He is founder and chief investment officer at Event Shares. Ben, nice to have you here.
Thanks for having me, Sue.
Quite a day to have you here, actually. What did you make, first of all, of today's sell-off, and what did you do during the sell-off?
Well, we're long-term investors, which I think most of your viewers are as well, so we're not reacting necessarily to this news. We're looking for opportunities, though, and I think that's why you're having me on. We're looking for areas of the market that maybe are being dislocated, because it does look like it's just broad-based selling. So it's not necessarily, there's no rhyme or reason to it. It's just everyone is de-risking their selling stocks overall.
So you're looking for sectors that maybe didn't deserve to be sold off. I mean, those that are not necessarily as exposed to the global economy as others. So what sectors are we talking about here, do you think?
Yes, so we like telecom, particularly the 5G, the fifth generation of telecom rollouts. That's mobile telecom. We like healthcare as well, certain areas of healthcare, even some of the managed care, which have been beaten up. We're generally a little more cautious on pharma and the drug distributors. And then we like some renewable energies. We like some infrastructure names as well. So there are pockets of opportunity out there, but you do have to know where to look.
Right, and perhaps just as importantly, what would you be staying away from?
Well, we're more cautious probably on technology, we're policy-based investors, so we're looking at government policy changes and how that's going to influence sector economics and the fundamentals of different companies. And our view on technology is going to be a continued challenging regulatory environment. We're seeing that more and more in the headlines, but we expect that to continue. We also think that individual investors are generally overexposed to technology, given the run that those tech stocks have had over the past few years. So you see, like, these tech stocks are becoming a bigger portion of the portfolio, but people aren't necessarily selling those and rebalancing back to lower weightings or more appropriate weightings.
And with yields at multi-year lows, do you see any opportunity in fixed income right now, Ben?
Well, we do, and we have a little bit of an off-consensus view that we think rates are going to go close to, at least so 10 years is going to go close to zero and could even dip into the negative territory in the next recession. So that means there actually is still some opportunity in bonds, particularly treasuries, U.S. treasuries, municipal bonds as well. We're a little more cautious on corporates, investment grade and high yield both, but there are opportunities in bonds in the U.S.
Do you think the longer-term investor should perhaps increase their cash position if indeed we still have the headline risk of the trade war slowing global growth, especially in Germany and China?
Yes, absolutely, and great question. I think a lot of people forget to view cash as an asset class. You can use cash. It creates a lot of optionality in your portfolio. So people who are sitting on a lot of cash right now are probably feeling pretty good when they look at this volatility, and they may even be able to dip in sooner and buy some of these bigger dips. This isn't the beginning of a recession, we don't think, but it is good to be kind of raising that dry powder, raising cash balances, have maybe 2 years on reserve plus 4 times when the markets get really volatile and everyone says, don't ever own a stock again.
On that note, Ben Phillips with Event Shares. Ben, thank you.